Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, the 15th of March. The week is over. Pretty much finished kind of how it started today with the bulls in control, closing a bit above resistance on the S&P 500. So we were finally able to, at least short-term, break through that resistance zone, with leading to some interesting potential opportunities here going into next week. Welcome, everybody. I hope everybody is doing well and you had a great day both in and out of the market. Certainly a nice, pretty smooth, bullish week. We did kind of bump our head at resistance on the S&P for a day or two. For the most part, we really saw the bulls in control throughout most of the week. And hello, Patricia. Great to see you. Looking ahead to earnings next week, it is another pretty light week, but you do have a few big names. There's around, hey, Lloyd. Oh, okay, why am I kicked off here? It says I'm kicked off. I'm going to test this, Lloyd. There we go. Hey, hello again. I don't know why it did that. I don't know what the deal is there. I got you guys back. And yeah, I hung out with Lloyd last night. It was great to have you there. I'm not sure what that little hiccup is, but that's the second time it did that to me this week. And I'm going to have to ask somebody smarter than me to figure out what that one is. So, all right. Well, welcome back, and welcome to anybody if you are just joining us here today. We do have a handful of earnings here next week. Big name Nike, that's the big one. But we also have a market recap. We do have a market recap today. We have a Micron. We have a FedEx. Around a little over half dozen S&P 500 companies is all next week. Nike kind of being the big name. So there you go, Lloyd. Yeah, I don't know what that deal is. I've ran into my share of technical difficulties in my life, and this is a new one, and I'm gonna have to figure it out. So, oh, good, thank you, Marie. Yeah, it says last time when it did it, it tells me on my streaming computer that I'm still streaming, but you guys were gone, and I could see the video. And then you were gone. So now I'm extra paranoid whenever anything happens. And great to see you, Marie. Hope you are doing well. Here we are on the 15-minute chart. We did see kind of that nice burst early as we broke through that resistance, followed by pretty much just slow but steady kind of selling or profit taking throughout the rest of the trading day. Certainly still looking pretty bullish, even on a 15-minute time frame. On the hourly, yeah, exactly, Marie. So on the hourly time frame, you can see, we still held that breakout point. We're still above all those short-term, hourly moving averages here as well. And of course, getting into the daily, the big one, of course, closing right above that resistance level. I think from a confirmation point of view, we need to take out this high, and I think that was at 28.15. Or so here today, pushing through that high. I will call that confirmation of the break, with really our next level of resistance, at least for me, for my money, the next level of resistance up here in that 28.70 range. That was an old top area, certainly an old support level, and certainly an old breakdown point. So if we can just carry this momentum through today's high, I'm going to look at it like we're going to try to be running into that level of resistance. So I expect with just a little bit of buying next week, I'll probably continue my overall bullish bias. Definitely a good signal. Those of you who know me know I always want to see that follow through, right? I never trust a single close. So, hey, Ed, good to see you, my friend. So I always want to see the close and the follow through. And that is always important to me. We're seeing that follow through, of course, right now in the NASDAQ, as tech really led the way here today. Certainly another good day in the NASDAQ. If we kind of think about this compared to the S&P, here's our S&P today, right? A little bit of a break out, here on Wednesday, carrying through our next level of resistance, probably for me at around 74. Will be kind of that number. I really like this sector, as you guys know, and great to see you, Ilka. Hope you're doing well, my friend. I really like tech. I know I'm certainly not alone in liking tech. I do think it's showing good leadership. Not a lot of resistance, ahead of us for another 100 or so points thereabout. At around 7,400, I would expect that could potentially act as some resistance. But as long as we hold this 72, stay above these moving averages, I will expect us to continue to try to work into that old resistance zone. Dow Jones even getting in on the action here today, up just closing up a little over 0.5%. But for me, from a technical point of view, more importantly than the number, we were able to push through that 20 that has kind of been sitting on us throughout the course of the week. We've seen more weakness, relatively speaking, in the Dow than the NASDAQ and the S&P this week. And this was just another little bullish signal, just another little thing that was in our way. So yeah, there you go. Hey, we welcome halftime crew members and market recap gang over here. So, and I'll actually be joining here late second half of next week over in the halftime report. So maybe we'll take that one over and claim it for ourselves. So, but we were able to close above that 20 period moving average. Not a huge win, but I think a little win, and what's interesting with this market, and we talked a little bit about it before, we broke out on the NASDAQ. Now we're one day in, but we have today broke through a resistance on the S&P 500. We still have a ways to go before we're challenging resistance into on the Dow Jones. So I can see an easy path where the bulls can kind of stay in control because there's room to run. There's room in the S&P. There's still some room in the NASDAQ. There's still some room over in the Dow Jones. So I'm liking the way that that's potentially kind of dominoes. We talked a little bit about that a couple weeks ago. I think, one falls, the next one falls. We're only a couple into it, but we'll see where that one goes. Then we got the rut, and the rut is having a heck of a time, unlike the Dow that was able to push through, close above, and at least get that small victory in closing, on top of that 20 period moving average. We're not seeing the same, at least as of right now, on the Russell. But what we are seeing, very interesting, is a little bit of a potential breakout pattern developing here with a little bit of a double top. Now we could also make the argument to potentially a breakdown if we do break that support level. And I think that's a fair argument to make. I don't think it would be a super bearish signal, but I definitely think it would be a bearish signal. Whereas the break to the upside going along with the other indexes, I would expect that to kind of get a little bit of follow through. That is interesting. I really find that, really interesting that we do have that, that short-term breakout pattern developing. If we can get through that 20, we're going to be getting through this, of course, this breakout, because that's exactly where it's happening, right? So that one's going to be a fun one to watch going into next week as well. So so no worries. Okay, it is. We're all team tackle, and that's what I love. There's lots of us, right? There's lots of us wherever you look. So beyond that little break, probably should keep an eye on the 200 here in just in case, right? I'm not overly concerned about it, but we probably should monitor if we approach it. But really, I think much like most traders, the 1600 is really that resistance. So again, much like the Dow, if we can, push up, we have a little bit of room to run before we challenge any, really noticeable, at least, level of resistance. So, hey, it's a pleasure. I've enjoyed Twitter, and more than I thought I would, to be honest with you. I'm not a social media guy by nature, but I've really enjoyed being able to kind of mess around and stay in touch with the team and share charts. That I think that's interesting. Someone else out there has to think it's interesting. May not, but somebody does. So I'm glad you're enjoying it, Ilka. I've really enjoyed it as well. Just another way to kind of get to know and hang around with Team Tackle, and I'm all about that. So materials selling off, I think at this point in time, we're looking at kind of developing to a little bit of a range. Much like we've talked before, this 56 break is, for me, a good signal. But I think right now, we have things that are already breaking. So again, kind of the dominoes right now. Hey, I'm going to work with tech. That's kind of the path of least resistance, from a short-term perspective. If we're able to break above that 56 in the materials, then, tech might to start be looking a little bit extended, or maybe I won't like as many things, and maybe I can turn to the material sector. I think right now for me, much more, again, it's just the way it's developed this week. I think in a little bit more breakout than pullback opportunity over in the material sector, at least widely speaking. I'm always open to an individual component, but 56 is turning out to be a tough break. And of course, that's not all that surprising. We do have a lot of history here, right? Old floor, old ceiling, old ceiling, old ceiling. So 56 has definitely been a roadblock in the material sector. Haven't broke support, haven't done anything wrong or anything like that. So certainly I don't think you can, call this bearish. At least I couldn't call it bearish, but it doesn't have quite the momentum that maybe we would like it to see. Yeah, me too, Marie. And I enjoy it. I've been a lonely trader, just kind of hanging around by myself, and I've, been around Team Tackle for a couple of years now, and it's a lot more fun to hang out with other traders than with me and my dog. No offense, dog. So, over in energy, another mixed bag, and it really is a mixed bag. You see potential breakouts in a few of the energy stocks, but you're also seeing things in like Halliburton that look an awful lot like, bearish retracements after some breakdowns. Still, for me, I have a hard time wanting to go bearish within this sector until we clearly come out of this range. And for me, that's way down here at this swing low. At least broadly speaking, I'll be open to some bearish sell opportunities next week in the energy sector personally. But as a whole, I really think the 67 is where I want to see it break. And we're not there just yet. We are still hanging in this range. So it's hard to want to be too bearish as long as we stay within this range. We did have that 2-day kind of fake out here late last week, but I think that's how I'm viewing that right now. This was just a fake out. We're still really undecided. We haven't decided which way wants to break one way or the other. So for the most part, I was not overly impressed with the charts I was seeing going through the market today in the energy sector. Really, either way, I think I found one bullish and one bearish trade for next week. So I have something in that area if I need it. So over in financials, another good day, another smack right in and close at that 200-day moving average. I like the way we closed here today. Of course, yesterday we kind of ran right into it and sold off of those highs. Here we ran into it and were able to hold those highs, but we were not able to break it. And it's definitely been a little bit of a challenge for the sector lately. We are seeing things kind of knocking on the door. Still a little bit of a mixed sector, but you're seeing some of those banks pushing some resistance levels. I still like it. I still want to see it get above that 200 to kind of give it a little bit more oomph. If we're able to do that, really 27, kind of that next level of resistance. So hey, no problem. We're better there than nowhere, Tanner, and great to have you back with us, my friend. So 27 really kind of that major resistance, but just with the way we've been behaving as of late at that 200, I do think we have to give it a little bit of respect, but I do like that we were able to hold those highs. We weren't running into it and then having profit taking jump right in immediately like we've seen so many times, on those type of scenarios. So we'll just see where that one goes. Not a lot of earnings in that area. I don't think there's really any of note in the financial sector here next week. So yeah, exactly, Marie. I mean, it really is, you can get lonely as a trader. You really can, because you're usually in your room, your office, or wherever you do your work, well, it's just you and your computer and maybe your dog or your cat or your bird or your fish. But like you said, I talk almost a lot. So I'll talk to fish and have conversations with them. You got a lot better to talk to, though. I will give you that. So industrials, I think I'm going to downgrade them a little bit myself this week. And really, I'm almost to the point where I want to see them break these highs from earlier in the week before I kind of get back on the bullish industrial train. I don't think I'm comfortable saying bearish on it. And it's not just Boeing. I mean, Boeing had an okay, bounce back here day today, still really volatile. I wouldn't want anything to do with it one way or another, but it's just showing a little bit of weakness after seeing this downward move off of this, these resistance zones that we really formed throughout much of this week. That downward move does concern me. For me, as long as we hold this support, I'm still, more bullish than bearish, but I'm not very bullish until we get back above this resistance. If we can push through this, I'll probably get right back on board, but I don't like the price action. And if we look at this on a short-term time frame, this is one of the areas just looks kind of yuck. The market's pretty strong. Yeah, some areas are, had a better day than others as usual. But where's the strength here in the industrials right now? And again, I think it's easy to blame it all on Boeing. But that's it. Yeah, I don't know. Too soon, Scott. So I don't know why it's having a hard time, but I do know that it is, and it's not. I'm not comfortable with where it is. I would have expected more interest off of that bounce, and again, we're just one day. I think it's way too soon to say I'm bearish on this, of course, but I'm just taking a little more cautious approach. Let's get back above this 75 level. Then there really isn't. Yeah, we'll have our 20, but odds are that 20 is going to fall down over the next couple of days if we challenge it, and it'll kind of line up for us. Should have some room back to 77 when that happens. Put in a little higher low here, run up in early next week, and I was worried for nothing. Wouldn't first time that happened. Maybe some really interesting things in there, and maybe the mid to late next week. And hey, Em, good to see you. And I saw you converted Apple into a risk-free play, so nicely done there. Always love to hear that. Yeah, Em's over on Twitter as well. Yeah, join us on Twitter. We have a pretty decent time. At least I think we do. So, but I did see Em was able to convert a long call into a risk-free spread today. So love seeing that. Love that. So over in tech, I mean, this is really where the strength has been really throughout much of the week, right? And it's certainly no doubt about it here today as well. Just kind of running just like the NASDAQ. With resistance, I'm going to call it 74, kind of like I am on the NASDAQ. They've lined up very closely, in my opinion, this last little while. We don't have major levels, but we do have, an old resistance level, kind of an old pullback zone and pivot here in that 74 range. So I will expect that to be a little bit of potential resistance. I don't think that's a place where you stop being bullish necessarily, but I do think maybe that's a spot where, is that a place where the pullback happens? That would make sense to me if that's where it goes. But I mean, we are showing a ton of strength above basically everything except our highs from back here, above all our moving averages, even on shorter term time frames. If you look at an hourly chart, I mean, we're still above the hourly 9 EMA. We've basically been above that hourly 9 EMA since the beginning of, forever, it seems like. And so we've really shown a lot of strength in tech. I continue to like it. You're seeing things challenge or break resistance within the area in quite a few places. So a nice area, still some room to run, in my opinion, as well. My highest ranked sector, I do a little bit different than some of the other coaches, but it is probably my favorite sector right now if I had to pick one. Staples, you're not my favorite. You're not my least favorite. You're just kind of there like you've been for a while. If we were looking for the clarity of, breaking back above this, out of this range, above this, we're not getting it this week. We were knocking on the door. It looked like on Wednesday, we maybe were going to actually see it selling off of those Wednesday highs and really just kind of dancing around at that price range. I still don't think you can call this a break. Personally, I think it needs to show more movement before you can say that. I know I'm a little more conservative than some folks in my demands, so I do understand that, but I'm not there yet. I still am calling it at resistance. So could we see a break as early as next week? Absolutely. But I don't think I could argue that we've seen that break just yet. So again, it's one of those areas that another week of kind of doing this or a little pullback and another run through that, I can see a scenario where a week from now or a week and a half from now, I really like the Staples sector. I just don't see that early next week. And I'm calling it 55. That's the number that I'm calling it. I know that's not a precise number. This is definitely more of a zone and going to kind of be open to some interpretation on a trader to trader basis. But for me, I want to see it close 55 before I start looking at it too bullish. Really fought hard at resistance. But, I see the market. The market had a good week. The staple sector short, it did, but it didn't go above and beyond. In these areas that weren't pulling their weight, leave me just kind of saying, what's up, guys? At least, in the very short term. I'm not long-term turned on the industrial sector, but short-term, I'm not afraid to turn on you if you're not behaving like you should. Over in utilities, we finally got some selling. We actually saw an interesting day in the utility sector, gapping down on the open, but we have seen so many times these things that get hot or cold and just go on these big runs, traders just look for an excuse. It looked to me like the excuse this morning was the 15-minute 200 moving average. Gap on the open, quick sell for a half hour, and then boom, right back into it. Whether that was the reason or not, we saw that happen here again today, closing once again above that 9 EMA. Maybe this will lead into some pullbacks. I mean, we are fairly extended. That doesn't mean it has to pull back, though. We all know that. But we finally did see at least a little bit of, well, you're not quite bulletproof utility sector, although you're still pretty darn close. We did see a lot of buying come in off of that gap to the downside. I wouldn't want to bet against the utility sector. Still above everything. Yeah, today we finally didn't hit a new all-time high. When that's about as bad as you can say about the sector, probably, especially utilities that tend to run very much so together, right? A lot of correlation with the utility companies. Maybe a pullback is in order. I wouldn't mind seeing it. Maybe we go into consolidation like we saw on real estate, where it just took a little bit of time to go back and forth, catch its breath after that nice bullish run. I still have a hard time seeing any bearish argument in the utility sector personally. Healthcare is going to be interesting next week because we're now running into those resistance zones on some of those healthcare plans. You know, you see CVS, CI are kind of working into those falling short-term moving averages. UNH kind of looks like it's, you know, potentially a kiss goodbye pattern, you know, on UNH, working right back into that old support level. And Dojing yesterday, pretty darn bearish candle. Most of the healthcare plans had pretty bearish candles here today. So it looks like we're going to start to see some sell signals in those healthcare plans. I think you could make a strong case that we're already seeing them. I don't know that you could be in them necessarily, but I guess that would be on a rule by rule basis. But I think that's going to put a little bit of pressure on the healthcare sector ETF. As I was going through the healthcare sector last week, I was finding lots of bearish things and bullish things. You know, we had Merck, ABT was my favorite healthcare stock going into this week, you know, in that nice upward trend. We're still seeing it, but those stocks trends are now pushing into those swing highs, pushing into some resistance zones. They're in upward trend. So, you know, when we're in an upward trend on something like ABT, it's not outlandish to think that we're going to continue to make a higher high, right? But it is not necessarily as comfortable as an entry point as it was early in the week, right? So we are seeing the stronger stocks in this sector, at least a lot of them, kind of working into resistance or kind of in the, you know, well, we've just hit that higher high. You know, this isn't my idea of a textbook entry point. You know, I wouldn't want to bet against ABT, but if I'm not already there, I, right or wrong, probably feel like I missed this pullback opportunity. So we're seeing that on some of the stronger performing stocks. Then we're seeing, you know, on the UNHs and the CVSs, we're seeing, you know, that's kind of scary looking. Upward move, bearish candle, a little bit of downward movement. Some folks, you know, depending on their trading rules, it did break yesterday's low. Some folks would probably call that confirmation. So these not necessarily so strong performing stocks are going to be challenged because they're setting up some potential bearish trading opportunities. Whether or not anybody trades them, we're just going to have to wait and see. But I think that's going to make for an interesting week in the healthcare sector as a whole. It's, you know, it's really, you're seeing just a very mixed bag in the sector. As you guys all know, we are on the ETF holding above that 91. That is a positive thing, but I want to see what kind of pressure we get if those, you know, bearish setups actually start getting folks into them. I still do not like the ETF as a vehicle because of how different some of these companies look. To me, I don't need everything going up or everything going down, but when I see such stark contrast, like, wow, that's a really nice kiss goodbye pattern on UNH, but ABT just hit an all-time high. They're not the only, you know, upward trending stock. I think we want to continue to be really careful with the healthcare. I still think it's a stock picker's area, just like the market is. So I don't think we have to leave it alone by any means. But I do think, you know, much like we've kind of talked really the last couple of weeks, I don't really like the ETF right now as a vehicle to trade it because, you know, I could be right, but those healthcare plans could bring me wrong if I buy into it, right? So I'll continue to treat it as such. It's going to be an interesting week, I believe, for healthcare next week, which is how interesting we're seeing that, you know, actually some setups developing on the bearish side right now. Over in discretionary, again, I still think, I mean, it's very undecided, and it's just not an area that I think anybody has a really good grip on right now. I think I'm probably not the only one who wants to kind of see some of these things start breaking resistance before they get excited. That puts us at, of course, 112 here on XLY, the discretionary ETF. Still really like it. Still really think that's a solid signal if we can close above 112. Just going to be patient, going to wait and see. Individual components, I have no objection to trading, one way or the other, but taking several trades within this sector, not really something I'm interested in until we either break 112 or we break 108. And I think either one of those places are areas that we could start to see some really interesting stuff happening. Of course, support down here at 108. I want the 112 break. I want it late next week, early the week after. I'm in no rush. But not a lot has changed. It's very indecisive. We were able to close up a little bit on the day, but another one of those back and forth days. Nobody really seems to have control of this sector at this point in time. Real estate, a little bit of a pullback here as well. So a little bit of pullback in real estate and utilities are really, really strong sectors to close the week off. Not a bad thing at all. On the real estate in particular, we really have a pretty clear idea of a potential support zone. If we do pull back into that 35, that might be a really interesting price if we can get some turnaround signals from a bullish retracement perspective. We may or may not get that, but at an old resistance zone, of course, that's an old level of around resistance. For those of you who are new, you can kind of see these are some kind of all-time highs that we're dealing with here on the real estate ETF. So a little bit more of a pullback would be probably welcome for a lot of REIT traders. REITs, of course, not a lot of swing traders love REITs because they are not particularly volatile. But I think the way that REITs and the real estate sector as a whole has performed this year has changed a lot of people's opinion on that, at least right now. So if we are able to pull back into that old resistance zone, into those rising moving averages here next week, and I'm not going to hold my breath, right? We're not entitled to a pullback, but it doesn't hurt to want one, doesn't hurt to ask, right? It might be interesting if we can work into the middle of the week next week with a little bit of a pullback here today. But for the first time, certainly this week, we actually had some selling going on in the real estate sector. XLC continues to be resilient, maybe is the word to use. Of course, Facebook, more bad Facebook news gapping down today. They did hop off of their lows on a positive note, but they're right back into this old trading range. I would say for me, Facebook, much like Boeing, is on a I don't want anything to do with you either way list right now. I don't have an opinion from a bull or a bear. You're just not behaving very nicely, and I don't want any. I don't want any more problem children than I absolutely have to have. But with that said, we were able to hold that 47 for a second day and actually put a pretty nice little hammer candlestick together by the end of the day, still closing above resistance, still closing above the 9 EMA. So we did see some resiliency here in XLC. I still don't have a great handle on this newer ETF. Some of these companies just don't seem to belong together, and I know that that's a me thing. I know that I'm just dodging. Most of these things were in tech for so long, and that's where they belong. Why is Facebook and Activision Blizzard in the same thing if it's not just one bundle of tech, right? And I know that's a me thing, and one of these days I'll get over it, but I still think right now is not that day. But from a technical point of view, above 47, a fourth day now, that's a decent little break. If we can get some Facebook getting back on track, we're seeing Google, of course, Google and Facebook, for anybody who's not too familiar with these ETFs, these are huge components of this ETF, and we're having Google hang out right below 12. If we can break through that 12, that's a pretty decent little break in my opinion. So if we can get Google and or Facebook, it's just hard an area to run when one of its major components isn't playing along, and if neither are playing along, it makes it very showing a lot of strength as we're 1200. If we can break that, I would expect that to be a bullish signal, and I think that could trickle down into the ETF as well. Still think that it's more of a case-by-case basis area. I'm okay with trading this, okay with trading that, whether it's bullish or bearish. I still don't trust the ETF. And I know, again, that is a me thing. And one day I'm going to have to get over that, but I'm not over it yet. But I can recognize that it is a signal. And I can appreciate that through quite a bit of selling in Facebook and some profit taking in Google here these last couple of days, holding that break. Quite honestly, if you would have said on Wednesday that Google was going to pull back the rest of the week and Facebook was going to have back-to-back gap downs, I would have said that the ETF was going to be below 47. That's what I would have thought was going to happen. I do appreciate the strength and resiliency that we're showing within other components of the sector. Just the big ones, they're just, I like Google actually. It's kind of in what appears to be the pullback phase to me. Facebook, I think that's become a very bouncy chart, and not a huge fan of things that I don't feel are well behaved. So, but a nice close above 47, regardless of what I think. We did close above that breakout basically all week long, right? 4 straight trading days. Over in the volatility index, nothing really to see here. A decent day in the market. Just a little bit down in the VIX as traders, again, right now, for better or worse, as traders, as investors, we feel like we've got a handle on the market, right? And as long as that's true, that VIX is probably going to continue to stay relatively low or continue to work to the downside. Over in the dollar, wasn't able to carry that momentum from yesterday. Of course, yesterday we had that nice green candle, bumping into that 9 EMA and falling down. Really saw a similar situation, except of course a red candle here today. So I don't think it was able to confirm for any of those potential pullback traders at this point in time. So I still think a pullback's in play on the dollar. I just don't think it's in play on Monday in the dollar, at least not per my trading rules. Support, I do think we can have a pretty good idea that we're down here on this swing low at this 50-day moving average as our kind of support zone. Beyond that level, our next support zone is going to be down here at 96, which is going to line up here with the 200-day moving average. So let's see if we can get some upward movement first if we're looking at that from a pullback perspective. And I certainly understand the argument for that. I don't think you could talk me into thinking it's confirmed, but you could talk me into trading this as a bull pullback potentially. I still am waiting for it to break out of this longer term trading range. So I'm not overly interested one way or the other, to be quite honest with. Well, I'm interested, but it's not really probably going to be impactful to me one way or the other. Because I am continuing to wait for it to come out of this longer term trading range myself. And that's a very good point, Marie. With the VIX getting lower and lower, it does open up the door for some relatively cheap put options, on the S&P or on the individual companies potentially, to get a little bit of insurance. You are absolutely right. I remember last January, Coach Mark and I were hanging out looking at how dirt cheap the put options were. And then February, we had all of that selling. And it was just, can't really take credit for being geniuses or anything like that. Mark probably would, but they were just really, really cheap. We're saying, wow, how do you not buy some cheap insurance? It's really, really inexpensive. And then, of course, we had a lot of selling last February, which all of a sudden, well, wow, that worked out. So that's a very good point from an insurance point of view. When that VIX gets low, those put options, we might complain we can't find as many good deals to sell, but we can open up the door for some potentially interesting buys, buying as insurance for our trade. So, yeah, I mean, longer term, I would say, well, again, that's probably up to the trader, Emily. For me, yeah, usually I'm going to be looking, at 4-6 months type of a deal. Another trader may feel a little bit different, and may pick up shorter term levels of insurance. Generally, it's been so ingrained in my head that you always buy time when it comes to buying options, no matter what your reasons are, that I have a hard time even thinking about not doing that. So yeah, for me, I would maybe say not long term, I would say more midterm. For me, again, there really is, a case we could buy longer. There's a case to buy shorter. Basically, what kind of a term do we want for that insurance policy, right? So, and you go 9 months, Marie. So yeah, there is definitely some gray area. I usually fall kind of in that half year ballpark personally, and I don't really think that Marie's right or wrong and I'm right or wrong. I think it can be a little bit of a preference, but I do think most folks would probably lean to the time like Marie and I do. We may disagree specifically on how much time, but I think we both have quite a bit of time in mind when we're doing them. And again, a lot of it will be the price, right? If I can pick up the January for just a little bit more than I can pick up the October, well, I'm always thinking about a deal, right? So, if I can get a little bit more time for not very much more money, well, hey, I'll always choose that option. No questions asked. So very good point, Marie. Thanks for bringing that up. Love when we complain a lot when the VIX gets low. Well, I can't find anything to sell, but kind of forget about what that, offers us, on the other side of things. So it gives us opportunities from a buying perspective, whether it's insurance or just directionally trading. It could be, we're all about taking the deals. That is the best way to put it. Over in gold, not able to really do much today. We did hold yesterday's low. So while we had a very bearish candle yesterday, we didn't even take out that, yesterday's low today. So we could look at that as a positive, still closing below that 50-day moving average. We could look at that as a negative. Right now, I think the numbers for me are very straightforward. Resistance, that could be our buy if we break out this 113.12 or so range. That would mean we likely either held support, double bottomed, and then broke out, or put in a higher low and then broke resistance, looking like an upward trend, or the 1280 as a support level. As if that breaks, I think that's a fairly bearish signal. In the middle, I'm not interested. Like we said yesterday, I'm not going to ignore that 1300 number, but I am kind of stepping away from thinking it's as important. We've pushed through it, we've broke through it, and I don't think it's as psychologically strong as it was when we first pushed through at this point in time. So I do think with the way it's developed, below 1280 would be a fairly bearish situation. Oh, we made lower highs and we made lower lows. Above 1312 or thereabouts, higher lows and then higher highs. Right now, I think that at least from a trading perspective, that's how I'm looking at it. Overall, I don't think it's a great swing trading environment for gold right this very second. I think it's a better cash flow area at this point in time, but that can and will change, right? And eventually, whether it's next week or not, I'll be saying something completely different. So over in silver, probably not. We of course ran into that old support zone, had our doji on Thursday or on Wednesday, ton of selling, much like gold, didn't take out that low, so didn't really kind of give traders an opportunity to sell more. So we did kind of hold our own. I think you could at least arguably make the same case on silver that we just made on gold, that if it breaks below here, that's a sell. And I would definitely make that case personally. That 15, we've got a lot of history there. It's a big round number. If that falls, we'll definitely call that a bearish signal. On the other end of it, though, if we hold this low and work up and break back above, which would now be the high from this week, I think you could say, hey, well, we made higher highs or higher lows and higher highs by virtue of doing that. I don't think I will make that case, but I would listen to it. I would at least listen to that case. Right now, I think it's leave alone. 15 is very strong support, in my opinion. I don't want to try to be short with that price just hanging out right below me. I don't think, I know that per my trading rules, there's no way I could buy this even if I wanted to, failed at resistance. We failed at support. We, at least as of right now, are making lower lows and lower highs. So even if you promised me silver was going up next week, I couldn't trade it because it would be violating my trading rules. If we push back above that 1550 area, we could talk, but again, I probably wouldn't listen. I'm probably still waiting for the day where, from a bullish point of view, at least, it gets back above these recent highs. And that's where I will actually probably be bullish, overall bullish on silver. So keep an eye on 1550, keep an eye on 15. Those really are short-term numbers, I think, to be watching from a support and resistance perspective. Over in Natty Gas, wrapping up the week right in that range. Good afternoon, Zach. Good to see you, my friend. Hope you're doing well. Hope you had a fantastic week of trading. We're just hanging out in this range. The longer we're in this range, sooner or later, we're going to break one way or the other, right? And honestly speaking, either way are going to be a signal in my mind. A break above is a buy signal, a break below is a sell signal, as we've talked before. For me, I'm not interested in a sell signal simply because of how close to a major level of support we are. That 250 is just such a strong level of support, and you can't ignore this 257, 258, 260 range from just a few weeks back as a support zone. So while I would call it a sell signal if we break down below that range, I just don't think there's any room to try to trade it. If we break to the upside, though, there is a little bit of room to try to trade it, I think. And so I'm much more open to a bullish position. I'd love another week sideways. This is my, I love when this stuff happens. So, I'm a big fan of things going sideways forever and then finally breaking. I haven't had it happen yet. We'll see how we open this week. If we can take this out, really at this point in time, there's not a lot of resistance until we get into that 312 or 15 type of range, which doesn't seem like a lot if you've never traded natural gas before. But if you traded natural gas before, you'll know that is a lot. So, we'll see where this one goes, but I will be calling it whether it's a tradable signal or not. Who knows what it's going to look like or how we're going to be feeling, but I will call it a signal either way, as really is. And I'm very happy that I can finally say that on natural gas. Over on crude, not really doing much. We are holding the break, and so it's hard to say that it's done anything wrong, because it absolutely, in my eyes at least, has not happened. Broke out on a pretty decent looking candle on Wednesday, just a couple of just their candles. So on a positive note, we're holding the breakout. On a positive note, we still got a rising 9 above a rising 20. Our 50's creeping up. I don't think there's any reason to change your opinion from what it was yesterday, to be quite honest with you. If you're bullish, if your opinion's bullish and you were playing the break, you probably wish it was moving a little faster. And I don't blame you. I would be too. So, but I don't think it's done anything to concern us at this point in time. I'll be looking at these short-term averages to kind of act as that new support zone here. Yeah, I mean, I would have expected it to at least try to push a little bit more, even if we, ran up and sold off of the highs. It just didn't want to seem to get going. And I think it's just one of those things that sometimes we get very accustomed to something breaking resistance and it runs quickly because we see that a lot. And more than that, we notice that a lot. Right? When something breaks resistance and we see a huge run, a big candle or a big 2-3 day run, that sinks into our brain and we remember that, right? When we see something break resistance and kind of putter around for a week, we just it gets lost in the shuffle. At least that's what I think happens there, Zach. We remember the exciting ones and the ones that just kind of pitter patter around and don't really do anything and just slowly but surely work. Those ones we just kind of look back in hindsight, yeah, it was pretty good. And so I'm not exactly sure what the reasons are, but I do know the technicals are still holding up at this point in time. So if I am in on a break from this recent little breakout of this zone, I'm not concerned from a technical point of view whatsoever. Am I a little disappointed it didn't move faster? Well, of course I am. Move, you darn thing. But but really, as long as we're hanging above, I don't think you can be too worried. I really think as long as we hold above that 55, you can still be comfortable from a bullish point of view within this now that we've taken out that resistance and closed. We can watch for and I don't know, to be honest with you, Tanner, I don't know exactly why it doesn't want to do that, but it doesn't want to. I want to try to zoom into an easy to read time frame. Here's our 15-minute time frame. So, there is, if we can take out some of those highs back up there, there's probably an easy run. So it's almost like it's giving those of us who didn't want to get into it a second chance. For those people who jumped in right when it broke or the next day on a little upward movement, they're probably a little bummed out. But those of us who weren't willing to do it that early, maybe it's going to do one of these little basing scenarios and then create a little top for us to try to jump in on the second wave. And maybe that's what it's waiting for. Maybe it's waiting for that second wave of traders. Maybe there just weren't enough, oil bulls, to get too excited. Hey, everybody saw the technical pattern. And so, there's always going to be somebody out there doing it right. but maybe it's waiting for that second wave. So we'll see where it goes. But we did hold our breakout for 3 days in a row. So, much like, the communications services sector, we've held that break, haven't done anything wrong, just going to have to be a little bit patient with us as long as we're holding that. We can watch these short-term moving averages to kind of work our way up. Sometimes that'll happen too, right? Where we go sideways for a bit, let that rising 9 get into it and kind of force its decision, if you will. So, ladies and gentlemen, that is it. That'll do it for the week. It was a good week, I think, in the market for most of us. Pretty well behaved bullish retracement. We were hoping for it 2 weeks ago. We got it last week, and really it was pretty well behaved for the most part. So I definitely feel like it was a nice market from just a behavior standpoint. We've got some NASDAQ in on the S&P, but the first day is usually the hardest, right? So we'll see if we can carry that momentum here early next week. Got the Russell, a little bit of a double top on that intraday chart. So right below that 20-day moving average. Definitely some interesting stuff going here into next week. And you're very welcome, Marcelo, and great to see you, my friend. Got to chat with Marcelo this morning. Real cool dude. So welcome again. We're happy to have you here on in the recap gang. There's always room for one more recapper. So thanks for joining us. I'm going to hit the road, guys. I'm going to go hop into the scouting report meeting, see what the other coaches are up to. One thing I will say is I noticed when we kind of, the spreadsheet that we use to share our trade ideas before the meeting, when more than one coach puts in the same stock, it'll turn purple. I noticed a lot of purple today. A lot of us had very similar trade setups on a lot of the same companies. So I'm interested to go see which one of mine they didn't let in and go try to fight for it. And we'll go from there. So thank you guys so much for your time. As always, it's more fun doing this with you guys than it is on my own. So thank you so much for joining me. If you are new around here, be sure to subscribe to the channel and hit the notification bell, and join us over at Tackle Trading on Twitter. Find me at Frank Martin 23 on Twitter. I'll get you added to our list. Like Ilka was saying, it's just another fun way for us to be able to hang out, to talk, to know what's going on. I want to know that Ilka's doing his homework and finding me a breakdown pattern. I love hearing that Emily has converted Apple into a risk-free trade. I mean, those things are exciting, and we're all busy. Twitter's turned out to be a really easy way to stay in touch with one another. So you don't have to use Twitter. I understand. But if you want to, come on over. We'll get you added to the list. It's a lot of fun to hang out with each other over on Twitter. If you enjoy the recap, it's always helpful and appreciated if you do give it a thumbs up, just to let us know that it's helpful, and that probably as importantly, let YouTube know that's helpful as well. So with that, ladies and gentlemen, thank you so much. I don't know. I think I got the title last week, Marie, but one reason I got the title is I was the first. Today I was the last. I was really busy in the afternoon today. So last week I had all of my setups in first. Today I had them all in last. And sometimes that means you don't win the tiebreaker. All of those purples that I brought up, they're going to go to Noah or Ty or Tim or Cody. So I'm probably not the lead bird dog this week, but that's all right. I'll be happy to be a bird dog. So thank you so much, guys, for those scouting reports and that newsletter here tomorrow. So you're ready to rock and roll on Monday morning. Have a great St. Patty's Day. If you're doing any fun St. Patty Day things, enjoy that. Spend some time doing some of the things that you love with the people you love this weekend, but be ready for next week as well. So thanks so much, guys. You guys have a fantastic weekend. I'll see you Monday.